There we go. Good, good morning, and welcome to Martyn Lucas Investor. I apologise for being stuck on zero. Not sure what happened there. Welcome to the Morning Forecast Show. My name is Sensei, and you are watching the Morning Forecast Show 2 hours before the opening bell, 1 hour before Martyn comes live. We are going to be covering the CPI report today. So, this is the biggest data of potentially the year. It's definitely the biggest data drop of the week. CPI, all about inflation. The higher it is, the less chance we have of rate cuts. The lower it is, the more chance we have of rate cuts, and the bigger the chance we get a rally in the market. So a very important day here on the show. So please do hit that like button as soon as you're here. Hit that like button. Make sure you have subscribed. Let's get straight into it. I do have a cheat sheet for you guys as well. Let me see if I can bring this on as well. Let's go over here. We'll have all the data ready for you guys. We'll be covering it with Bloomberg. We'll be covering it with the FX Street. We'll be covering it with our own data. So let's go straight to that cheat sheet and welcome everyone into the show. Let's go to this over here. Let's see who is here right now. Let me put that countdown on the screen. There we go. Okay, so who's here with us? Has everyone hit the like button? Yolanda says, hello, Sensei, glad to see you back. Yes, I'm always happy to be here. Thank you, Yolanda. Yesterday I was at an appointment, so I couldn't do my morning show. Hit the like button on your way in. Yolanda said it first. I love it. Zach Zate says, happy Friday. Matthew says, good afternoon. The Patrick Black is here. Sunny. No, it's raining here, says Matthew. The Nutella is here. Alex Aranda is here. Can everyone let me know if you can hear me and I'm coming through okay? We had a slight glitch where I got stuck on the zero timer, but I think we're all good now. David is here. Lionel is here. Good morning, everyone. Renee Zanin is here. Good afternoon, all from the Netherlands. Renee Zanin representing the Netherlands. Lovely to have you here. Alex Aranda is here. Alexandra is here. Melvin is here. Louis is also here. Love the show. Thank you, Louis. Appreciate it. Chris is here. Yolanda says, yes, we can hear you. Brilliant. Thank you, Yolanda. Chris says, hello, Sensei, and all the rest. Please like. Yes, can everyone hit the like button? CPI coming up in 51 minutes. Glad to have you back, Sensei Shed. Thank you, Paul Man to Richman. Happy Friday the 13th. Yeah, isn't that unlucky? Isn't Friday the 13th an unlucky day? Hope everyone manages to go through the whole day without any bad luck. Carl is here. Good day, Lucas Aids. I think today's a day where shouldn't be trading. I've heard it's a bad day. Nico is here as well. Okay. Thank you, everyone, for tuning in. Let me zoom this out a little bit. This is something we put out to all our premium members this morning as part of the CPI cheat sheet day. We'll be going through some of it, but not all of it. I hope everyone's got today's newsletter. If you go to sensei.news or if the first link in the description as well, you can go see Morning Forecast Friday, the 13th of February. The top stories today are Trump team trims metal tariffs. We've got Coinbase swings to loss as crypto slows. Rivian had a massive jump this morning, and the double carrier diplomacy. We've got lots of carriers heading towards the Middle East. Concerns there of a war potentially breaking out. We've got trucking stocks hit by AI fears, and of course, the main story of today, which will be unfolding in 50 minutes' time, is CPI. Can everyone take 1 second? I know a lot of people have just tuned in and a lot of people haven't done it yet. Please hit that like button. It takes 1 second and it really helps the show. It's free. I know a lot of people are just woken up. You can still do it. I believe in you. Hit that like button. Let's get it up to 100 likes. Reading some comments there. Lucky to me, says the Nutella. You like the 13th. I love it. Smash the like button, says Slim Jim. Yes, please do. Ubisoft recovery. James, I haven't looked at UBI soft recovery. What's going on? Got something weird coming through. Can you guys hear that? I don't think you can. What is going on with that noise? Anyway, I'll sort that out later. I've got some real buzzing noise, and maybe it's an animal in the room. Anyway, let's get back to today's story. So we know what's going on today, but the most important part is the inflation tiebreaker. So today's inflation report serves as a final arbiter for the market struggling to reconcile contradictory labor data. While the consensus forecasts a decline to 2.5%, that's what we're looking for today, historic revisions and seasonal factors introduce significant volatility. For investors, the print will either validate a dovish shift or reinforce restrictive policy through the summer. A cooling trend would likely ignite a recovery across tech and digital assets after intense selling. Conversely, a stubborn reading could confirm that tariffs and service costs are keeping prices higher. This data ultimately decides if the central bank can justify lowering rates by mid-year. So it all stems on CPI. We're looking at inflation data. CPI is the most popular way of looking at inflation. The Fed's preferred method is PCE. My preferred method is PPI, but the market looks at CPI the most. So again, the most important data probably of the year is going to be released in 47 minutes. But also, it tells us if there's going to be rate cuts, no rate cuts. It tells we are actually expecting the lowest print in maybe years and years and years, year over year. So let's go over to the cheat sheet and let me tell you a bit more. So the data is dropping at 8:30 a.m. Eastern time. We have got that in 47 minutes. We've got a long weekend. We're heading into a long weekend, so that can increase our volatility as there is less liquidity in the market. So do bear that in mind today. I think Monday is a market close because of President's Day, meaning this long weekend, we're going to reduce our the liquidity, meaning moves can be faster, sharper, and more dangerous today, and especially when we've got this CPI report. So today's January CPI report is the single most important data for the market this week. Wall Street expects headlines and core CPI to drop to 2.5% year over year. That's the number, that's the consensus. Above it, below it, at it, that's what the market will react on. 2.5% year over year. We'll get into the exacts of it shortly. Let me make this a little bit bigger. Ooh, maybe that's too big. So a soft print, so what do we mean by soft? A lower than 2.5% print could resurrect rate cut hopes crushed by Tuesday's surprise jobs report. So Martyn covered the jobs report on Tuesday, and if you remember, it was a massive divergence from consensus to the upside, meaning that there was more jobs created than expected. So that wasn't great for rate cut expectations. So today is the day where it confirms that data we got on Tuesday, or it goes against it, meaning we can have a rally and have some more rate cuts this year. A hot print, so that's if inflation is higher than 2.5%, maybe 2.7, 2.8, 2.6, would slam the door on any near-term easing. So when we start looking at the Federal Watch tool on rate cuts, and I've got some predictions over here, this is what the market, the reason people look at CPI is because the probability of these changes based off CPI. So the scenario is no rate cuts in 2026, 5.4%. If inflation is higher than expected, expect this probability to go up. Expect the one cut probability to go up, and the cuts from 4 or more, 3 or more, to decrease. If there's less rate cuts, less liquidity in the market, less easing, the market won't like it. Gold, silver won't like it. We'll get an equity and digital assets and commodity reduction in price, and maybe a correction or a crash depending on how bad CPI is. But if we do get a lower than CPI, lower than forecast CPI report, then that's when we get 3 rate cuts become more likely, 2 rate cuts become more likely, and no rate cuts to become less likely, and 1 rate cut to become less likely. It all depends on the data we see. Remember, the Fed always says we're data driven, and today we've got the biggest data of the year. Volume good, thank you, Joey. I don't get the market sometimes. Coinbase lost 667. CEO sells 550 million shares at all-time high. Result pre-market up 5.71%. Yeah, well, again, the market, as people that watch the market, we aren't the market. We're not major hedge funds. They look at everything and they decide what the price of the market should be. So we might look at something and go, wow, Coinbase had a loss and it was its worst quarter ever. But the story is something completely different. It would be maybe the fact that certain numbers were better than expected. It could be the fact that the market sold off into it and it was priced in for something worse. So again, bad news can mean good price action. It just means that worse news was priced in. So someone just asked about Coinbase, and that's my explanation on that. I think we've got a story, in fact, we do, on Coinbase in the newsletter today. Let's see if we can skim over it very quickly. Again, if you haven't got the newsletter, I'll put the link in the live chat. Here is the newsletter link. You can get a free trial, or you can sign up for the free plan and you can still get some of these stories. So Coinbase swings to loss as crypto slows. So you are right, it wasn't great. Coinbase isn't performing well, but remember, Coinbase has come down so much already that the earnings wasn't as bad as expected, or there was something good within it. So it posted a loss. Sharp reversal from the 1.3 billion in profit. Revenue fell, missing what the analysts were looking for. Again, not a massive miss, 1.78 versus 1.83. The pain largely came from a 45% drop in consumer transaction revenue. Also, Bitcoin's drop. But the bigger picture is diversification. While trading fees are drying up, subscription and services hit 2.8 billion for the full year, now acting as a critical stabilizer. So now this is what analysts would have been looking at. The fact that subscription and services revenue are the highest it's ever been. It also is now acting as a stabilizer in the volatile crypto market, where that you've got certain seasons where a lot of people will be trading and certain seasons where there won't be. But the fact that they've got this Coinbase One and their subscription model, and also their prediction markets, this, that, and the other, that gave hope to the analysts, the hedge funds, and that's why the market might be up on Coinbase today. So you can't just look at it based off one headline. You have to look at the whole picture. Coinbase is essentially betting that it can survive the cyclical nature of crypto by capturing more market share, which actually doubled to 6.4% in 2025. For retail investors, the story isn't just about trading volume anymore. It's about whether non-trading businesses can grow fast enough to offset the next crypto winter. The data release is literally, I've got a timer on the screen. The two people have just asked, when do we expect it? It's in 41 minutes time. That's when the data will be released. It's on the screen right below me. How do I point at it? There. Over here. Oh, God, I can't point. There. 41 minutes. The timer is on the screen. You won't miss it. We just had a question about Coinbase, so we just quickly covered it. Let's go back to the report. Again, if you guys want to see what the expectations of this year are with rate cuts, there's a 5 currently. Again, this changes after every big data report and changes throughout the day as well, but majorly on big data releases. What we're looking at is no cuts at 5.4%. This is by the end of 2026. Where are we at? Have we had no cuts? There's a 5.4% probability of that. Of course, the market hasn't priced that in. The market's priced in somewhere between 3 cuts, 2 cuts, 1 cut, probably around the 2 cut mark is what the market's priced in. Anyway, 5.4% no cuts, 21% chance of only 1 cut, 32.5% chance of 2 cuts, 25% chance of 3 cuts, and 4 more cuts, 14.7%. So I would imagine if we are by the end of the year and only had 2 cuts, I don't think that's what the market would want. The market is looking at having 3, 4, or more cuts. But again, if we start pricing in 1 cut or no cuts, that's when the market's reaction won't be good. We'll get gold selling off, silver selling off, equity selling off, crypto selling off. Again, this is only one piece of the puzzle, but it's quite a big piece of the puzzle. Everything about inflation, jobs, and rate cuts. Again, the market can go up if the rates are going up, but again, this is a big piece of the puzzle currently because the whole market is focused on what the Fed is going to do and how much liquidity they're going to bring into the market. And remember, the recent sell-off all started with a new Fed chair's announcement. Again, there was a lot of things coming together, but the day that we got the announcement of Hassett, was it Hassett? Kevin, whichever Kevin it is, there's two different Kevins. The new Kevin, I forgot his name, but someone can let me know in the chat. The new Fed chair's announcement, that's the day where we started seeing crypto unravel, stock market, AI come down, because he was a bit more hawkish, or the market perceived him more hawkish than what they would have expected from Trump's pick. Anyway, that's a rundown of where we think rates are going. Let's go back to our cheat sheet. What are we expecting? Well, remember, this report was originally scheduled for a couple of days ago, but it was delayed by the brief shutdown we had in the US. And the Bureau of Labor Statistics is also releasing updated seasonal adjustment factors covering the past 5 years, meaning historical CPI data may be revised, potentially reshaping the recent inflation narrative even before the new January numbers land. So remember, there are revisions, and we could be seeing some today as well. Oh, Kevin Walsh. There he is. Not Kevin Hassett. That was the other guy. Kevin Walsh. Thank you, Casey. Thank you, Ricardo, the loyalist. Let me just read some comments. Good morning, Sensei. Thought on Russia going back to the US dollar? I don't think they will. Haven't seen any news about that. Are you saying they have, or thoughts if they do? Let me know. Zach Zay is here. KC is here. Ricardo is here. Poor Man to Rich Man says, Zach, yes, happy Friday the 13th. Human Being Liz says, good afternoon. Happy Friday, everyone. I predict a 2.4% CPI print. Bitcoin will spike from 65,000 to 68,000. That's the prediction from one of our subscribers. Poor Man to Rich Man says KC. Heinrich Investment says, as of Friday the 2026, reports indicate Russia is considering returning to US dollar for international settlements as part of a proposed sweeping economic partnership with the Trump administration. That is very interesting. That would obviously be good for the dollar. We'll have to see how that story breaks and how it goes forward. I'm going to put a poll in the chat for everyone's predictions. CPI predictions. So let me tell you about. So headline is, let's do it on core year over year. I'm going to do a poll, core year over year. So consensus is 0. Let me go over here. Consensus is 2.5%. So I'll write in line. %2.5%. We'll put hot. We'll say 2.7%. Cool. We'll say 2.3%. So I'm going to put a poll in the chat. Put your predictions in. CPI predictions core year over year. Do you think it's going to be hot? That means higher than expected, 2.7% in line, 2.5% cool, 2.3%. Let me put that poll in the chat. I'll put in line. I'll be boring and say in line. Not good for assets. Everything will stay the same. What do you think of Polymarket launched 5-minute Bitcoin prediction markets with instant settlement? I think more manipulation. Oh God, yeah. I mean, these prediction markets are going crazy, aren't they? Dan says, afternoon or happy Friday. Let's hope for a good CPI report and a rally. Casey says, hi, Yolanda, Liz, and Poor Man to Rich Man. Lovely to have Casey in the show. I hope everyone enjoyed her show yesterday. It was great, wasn't it? Let me check this. We have 300 people watching. Can everyone please smash the like button? We're now nearly half an hour away from the CPI report. If everyone can please hit this like button, it will share it out. If you've just woken up and you haven't done it, it's on your TV. Just take a second, find out how to hit the like button. It takes a second. It's free. Do it now while we give you more information about the CPI report. If you haven't got the newsletter, every time there is a CPI drop, every time there is an FOMC, every time there is a Japan carry trade, every time there is any big event, I'll be giving you a cheat sheet like I have today. So go and check out the newsletter. There is a free trial. There is also a free plan as well, which is certainly one of the best free plans out there. So let's go back and take it step by step the closer we get to CPI. So the consensus number every trader needs to know. So if you're looking at this event, whether you're trading it, whether you're looking at it, whether you just want more information, these are the numbers you need to have in the back of your mind. The street expects inflation to cool meaningfully in December. That's the street. That's the analyst. That's what everyone is predicting is an inflation cool. So that is already taken into account in the consensus number. Driven by favorable base effects, January 2025 core CPI was a hot 3.1% year over year. So again, remember, year over year, you're looking at last January. And because last January was pretty hot at 3.1%, it can look better this year because we're basing it off January's number when we look at year over year. Making the year over year comparison easier and lower gasoline prices as well. So that's why we're expecting a much lower year over year number. Again, we are still at higher prices than we were last January, even though it was a 3.1% last January. Inflation doesn't go down. We're not having a deflationary situation. We're just inflation is disinflationary. I think that's the right terms. Deflation is when it's under zero. Disinflation is when it's lower. So what you've got now is 2.5% what we're predicting, especially the fact that it was so hot last year. It looks better when we look at it today. Anyway, these are the consensus numbers people need to be aligned with. This is the highest impact data we're getting today. So if we go over to here, to this screen over here, you can see we're getting a couple bits of data as well, consumer price index core, and we're also getting consumer price index core month on month, month over month. But that is a very low impact story. What we are looking at is CPI month over month, CPI year over year, CPI core month over month, CPI core year over year. January's data, that's what we're looking at. So these are the 4 bits of data that we're going to keep a close eye on. Core is a little bit more important than the rest. Anyway, consensus for headline CPI month over month is 0.3%. Previously, it was also 0.3% in December. Headline CPI year over year, because it was such a hot January last year, we're looking at it lower, 2.5% slash 2.4%. December was 2.7%. Now we come on to core, which is arguably a bit more important. Core CPI month over month, we're expecting, well, the market's expecting, this is what all the predictions will be based off, and how the market moves is based off what the market's already priced in, which is theoretically the consensus. So month over month is the same as headline CPI, 0.3%. Previously in December was 0.2%. And then core CPI year over year is 2.5%. December 2025 was 2.6%. So these are the numbers, 0.3, 2.5, 0.3, 2.5. Very easy to remember. That's what the market has essentially priced in. Now, there is an argument to be made that if we get these numbers themselves, that consensus, the market will rally just in case they were predicting something worse and it's not as bad as they thought. So they de-risked by getting out the market. Now we've got these numbers, they can come back in. So there is an argument to be made that if we get these numbers, the market will still rally. But in general, what you want to see is the consensus is what the market's priced in. Above it, you have a market reaction. Below it, you have a market reaction as well. At it, you also have a market reaction, but the bigger market reactions is if it diverges from those consensus numbers and by how much it has diverged from those consensus numbers. I hope the more we cover these CPI reports and these data reports, everyone's getting the gist of it a bit more. Let me know in the chat, yes or no. Are you understanding these CPI reports a bit more, the consensus, the moves, the hot, the cold, how the market reacts to them? Is everyone understanding them a bit more in the chat now that you've probably seen a few that we've covered? Yes or no in the chat. Let me know. Do you understand? Do you understand where we are? Everyone's following along nicely. Let me know in the chat, yes or no. I hope people are starting to really get a grasp of all of these data releases. Because at first they seem simple, then they seem complicated, then hopefully they seem simple again. Let me know in the chat. I am keeping an eye on it. Yes or no? Do you find these data releases more and more understandable? Do you understand them more? Are you following along? Are they easier the more we do? Let me know yes or no in the chat. Yolanda says hi. Hungover Star says good morning. Frank Muff says good morning. Let's crush today. Let's do it. Can everyone also hit the like button? We're 30 minutes away from CPI now. Let's make sure everyone is tuned in. Yolanda says yes. Brilliant. I love that. I knew better than I did yesterday, says Franken Muff. Brilliant, Franken. Love it. So there's a notable divergence beneath the surface. The Cleveland Fed inflation now pegs headline month over month at 0.13% and core at 0.22%, well below street consensus. Meanwhile, Barclays forecast month over month at 0.39%, warning that 10 of the past 11 CPI prints have been surprised to the upside due to calendar year price resets. Goldman Sachs sits near the consensus of 0.33% for core month over month, but expects a softer headline 0.24% thanks to falling gasoline prices. CPI has come in below Wall Street consensus for 3 straight months. If extended, that streak could trigger a significant dovish repricing. So the last 3 times we have got lower than expended, lower than consensus. Let's see if we can continue that streak. But you can see there's analysts that are disagreeing with each other on specific numbers that they expect. So what is hot? What's in line? And what does this mean for markets? So not all 0.3% readings are created equal. Here's the framework for interpreting today's number. If we get core month over month above 0.45%, and remember that is we're expecting 0.3%. If we're getting at 0.5%, for example, and we get year over year above 2.6%, which the probability is pretty low, that's when we get the S&P 500 down 1-2%. Yields would surge, rate cuts will be pushed to late 2026, and we would expect less rate cuts as well this year, and that's when we'll get crypto dumping. That's if we get 2.7%, 0.5% month over month, 2.6%, 2.7% year over year. A hot one would be about 0.4% above 2.6% year over year. That's when the S&P 500 might drop 0.5, 0.75, 1% on the day. Bonds could sell off, yields go higher, the dollar will strengthen, and then the March rate cuts. If anyone was expecting March rate cuts, which the market is currently pricing in March rate cuts to an extent, that will be off the table as well. If we get at the baseline, so again, remember we go back to consensus. The base is about 0.3% month over month, 2.5% year over year. If we get those numbers, then the S&P 500 is most likely to go up, because people would have taken money off the table, de-risked, and if the news is at consensus, they come back into the market, and that's when we'll see the market go up slightly. It'll be a green day in the market, is my expectation again. There's other things that can affect this. I'm not a financial advisor. I don't know every ins and outs of it. But in theory, as we've seen it over and over again, if we're at consensus, we'll see the market rally a little bit, especially when it's to do with CPI, because the CPI number is so good anyway, 2.5%, 0.3%, they're good CPI numbers. So the market would be green. Not a crazy rally, but if we do, when we get a crazy rally, is if it's below 0.3% year over year and below 2.5% year over year, that's when we see a cool and cold number. That's when we can see the market rally about 1.5% in a day. We can have aggressive rate cuts repricing. We might see that rate cut in March actually go ahead, and we'll see the odds of that jumping. We'll see the dollar dropping, and we'll see gold, crypto start really moving to the upside quickly. Let me make sure I can have some of these charts on the screen as well. Shall we put XRP's price there? We'll put the what should we put? Let's put the S&P 500 maybe. Let me go over here. Maybe we'll do a dual screen. Up and down. Let's see how this looks. Yeah, we can do that. Let's put the S&P 500 down here. I'm just getting some charts ready for when it drops. Maybe it's better the other way around. Yeah. Okay, we'll have the S&P 500 on the right. Let's go 5-minute time frame. So that's the S&P 500 on the right. We'll have XRP on the left. There we go. We'll come back to that when the report is dropping, and let's make sure Bloomberg is up and running. We'll get some information from there as well. Bloomberg will be over here. Perfect. Can everyone make sure you press the live button as well on the stream you're watching right now? I don't want anyone to be left behind when the data comes out. So you can see on YouTube here, there is a live button. Let me zoom in on it. Make sure that live button is green. That makes sure you are the most up to date with us. And on the right hand side, there is some cogs as well. You see these cogs right behind my head over here. Oh God, maybe I move out the way. You see this cog over here? This is another top tip. If you click on it, you press playback speed, and then you go over to 2x or 4x, depending on if you've got YouTube Premium. Let that play through, and then you're 5 seconds behind me. So now I'm 2 seconds behind Bloomberg. You're 2 seconds behind me. You're 4 seconds behind the actual data release. So that way, especially when we get closer to the 23-minute countdown ending, you can be just up to date as well. That's a top tip for everyone watching. Firstly, make sure you've got, I'll explain it again. Firstly, make sure you've got the live button red, and then go over to the settings, cogs, playback speed 2x. You'll hear me go really fast, and then you'll be up to date. Put that over here. Let me move it a little bit. There we go. Okay, let's go back to our report. If you have just tuned in, we are we're 23 minutes away from the CPI data release. We are giving you all our analysis, what we think is going to happen, how to prepare for it to go up, down, what will mean it will go up or down. But now I'm going to talk about Tuesday's shock jobs report and how that affects this decision. So if you appreciate it, if you're watching live, and I know it's early in the morning for many people in the US, please do take that a second to hit the like button, subscribe if you haven't done so already. There is a free plan on the newsletter, and there's a free trial on the newsletter as well. So grab it as well. The link is in the live chat. It's also the first link in the description. Let's quickly go over to live chat. I don't want to leave anyone behind. I want to answer everyone's questions very quickly. Then we'll come back to analysis. We've got a poll running as well. Has everyone voted? CPI predictions for core year over year. What's everyone's predictions? 2.5% in line. Actually, everyone's predicting hot. 41% of people are saying hot, 2.7%. We'll get a bit of a crash if that happens. In line, 2.5%. Cool. 25%. Okay, keep voting in that poll as well if you haven't done so already. And for gold and CPI, and for gold during CPIs, gold can go up or down. Guys, look, it's ridiculous. If I knew what the CPI print was tomorrow, I would be a billionaire, because oh God, we've just got a crash in the markets. No, not a crash. We've just got a sudden. Someone might know. Someone might have just put a trade on. Let me show you this. I can't put it on that screen. Let me put it on this screen. Look at this. We've just got a sell-off in the S&P 500 and on XRP. We've got someone who knows something. Maybe they sell it off to buy it back. You never know with this. You can't take those moves as any guarantee. Anyway, what I was saying is, someone's just asked me, is it going to go up or down? I don't know. I just prepare for all scenarios. I don't have a crystal ball. That's not the point of these shows, to make random predictions that will be right 50% of the time. That's not the point. I can give you my thoughts and opinions, but it doesn't mean anything. What we're doing here is getting you educated, getting you ready, so you know if the market reacts maybe the wrong way, then that might be an opportunity to understand the market reaction, to understand if you're in a position, how much how much you can expect the moves to be today, what will mean what. It's about getting you prepared rather than me just saying what's going to happen. Because if I knew what was going to happen, I'd be a billionaire buying myself, I don't know, 50 Ferraris. If I wanted to do that, I probably wouldn't, but I would have solved world hunger. I don't know. That's not the point. I'm not just going to tell you what's going to happen, because I don't know. And if you hear anyone saying they know exactly what's going to happen, well, they don't. They're just making a prediction. The most important thing is to understand, if this happens, what does it mean? If that happens, what does it mean? How much can it go down? What's the most likely scenario? How do I manage my risk? What does this mean for my portfolio? Has it overreacted? Is there an opportunity? Once you've got the data, winners don't just make it. That's gambling if you just want to guess. Winners take the data that comes in front of them, understand the data, get prepared for the data, and make educated decisions based off it. And that's what we're trying to provide here, is giving you the deep dive, giving you all the cheat sheets, getting you to understand the situation. So when an opportunity presents itself, you're not scared to take it because you understand the situation. Anyway, the S&P 500 is certainly moving down a little bit over the last 5 minutes. It's just dropped 0.2%. Maybe someone knows something, or maybe they're selling it off to bring back the market. Who cares? No one knows. We're waiting for the data. Okay, let me continue with this. Has everyone hit the like button? NASDAQ also, please. Oh, you want the NASDAQ as well on this? Oh, God. I don't know if I can put the NASDAQ on. The NASDAQ will move very similar to the S&P 500. So they're very similar. Yeah, it just will be too small if I put the Nasdaq as well. But we will look at individual stocks as well. We'll go over to the big screen and put the individual stocks up as well. I've got the Nasdaq here. Don't you worry. Someone's asked for the Nasdaq. The Nasdaq is here. Is down 0.3% today. We've got the S&P 500 down 0.44% today. We've got XRP over here. We've got Bitcoin up on the day. It could be a very volatile day after the CPI. So very important we continue going through. If you have just tuned in, hit that like button. We are 18 minutes away from CPI, giving you all the best data. The one place you need. CPI Sensei, you are the CPI beast. Thank you. Like the video, everyone. Thank you. Yeston, lovely to have you here. Bullish or bearish? Yes, let us know. There's a poll running. Are you bullish or bearish? What do you think CPI is going to be? This is the most important CPI print of the year. This could be the lowest CPI print of the last 5 years as well. So 2.43 is Yeston's guess. But what am I expecting? Again, if I'm going to say something, I'm just making a prediction. It doesn't really mean anything. What I'm expecting, just a wild guess, I'll probably say a little bit hotter than expected. But again, it means nothing. There's no point of me making a guess. The point is to understand all the data. Not wearing the McDonald's hat. Sensei, cut the music until they like. Cue the music until they like, says Evan. Yeah, we'll put the music on in a second if everyone doesn't hit the like button. Okay. Here we go. So let me reiterate what's going on today. We're getting the CPI print. Today's January CPI report is the single most important data point, I would say, of the year. Remember, it's been pushed back 2 days because of the government shutdown. The consensus numbers, these are the 4 bits of data we're getting today. We're getting a couple more bits of data as well, but they mean nothing. They're so low impact, it's not even worth covering. What we're looking at is headline CPI. Headline CPI, one is month over month, one is year over year. We're looking at core CPI, month over month, year over year. Those are the 4 numbers. Consensus is essentially, you just need to remember, the month on month figures, we're expecting 0.3%. The year over year figures, we're expecting 2.5% for each of the headline and the core. So very easy to keep an eye on this time. If we get something like 2.6% or higher, for the year over year, we expect the market to come down. If we get anything like 2.4% or lower, we expect the market to go up. And by market, I'm not talking about bonds. I'm talking about specifically equities, digital assets, and gold and silver. Those fall in the same brackets. Bonds act differently. So when I say the markets move up, I'm talking about stocks, crypto, gold, and silver. So again, the higher it is, the more we're going to crash. The lower it is, the more we're going to rally. The closer we are to consensus, if we hit consensus, we might just have a small rally. And the less. So the more the divergence, the bigger the move. Those are all the numbers. Again, it's all in the newsletter. Like, you will be following along. If you had the newsletter, you would have this PDF in front of you. You can see what would be hot, what would be cold. You can be following on. You can have all the backstory as well. I'll give everyone the link. It just takes 1 second, and we've got 16 minutes. So if you haven't got the newsletter yet, there is a free trial. There's also just the free plan as well. So go click on it, sign up. It's all your email. You can unsubscribe at any point. You can try it on the free trial. You get all sorts of perks and benefits. This is one of the tiny perks you get, is the cheat sheets for all of these events, whether it's for FOMCs, Japan's rate cuts, decisions. That's just the daily newsletter, the £5,000 portfolio challenge. There's so much in there. I don't even want to go into it right now. But if you just enjoy the CPI reports as well, go check out the newsletter. At least go and try it. So this all comes with the backstory of the S&P 500 is dropping a little bit fast now. Let's have a quick look at it. S&P 500 is coming down to being down 0.5% on the day. So another red day from the S&P 500. Remember, my outlook for the year was actually a correction, potentially a recession, potentially a carry trade, or just an AI trade that needs to cool off. So my outlook is the S&P 500 coming down. Remember, MicroStrategy tops out first, which it did. Bitcoin tops out next, which it did. The S&P 500 tops out next, which it, in my opinion, might have already topped out. Then MicroStrategy bottoms out. Maybe it's bottomed out. Bitcoin then bottoms out. I expect Bitcoin to take one more flush to the downside and then bottom out. Then the stock market bottoms out. Then MicroStrategy rallies first. Then the crypto market rallies. Then the stock market rallies. So right now we're in that section where we're looking for crypto to go a little bit sideways, flush out in May, and we're looking at the S&P 500 to come down as well. So we might get that little bit of a hot print that can start off that whole sell-off. We will see. Anyway, let's go back to the cheat sheet. If you have just tuned in, hit the like button. It takes 1 second. It will be great. Wow, we've got 603 people watching. This is incredible. If you guys are new here, please do subscribe. We cover all these data reports. So this all comes on the backdrop of the Tuesday's jobs shock. Remember, we got data on Tuesday. Martyn covered it live on the channel. It landed like a bomb. The economy added 130,000 jobs versus a consensus of just 55,000 to 75,000. Goldman had only forecasted 45,000. So the unemployment rate, unexpectedly, again, against consensus, actually dropped to 4.3% from 4.4%, and wages were hot at 0.4%, pushing the year-over-year earnings growth at 3.7%. Household survey was stronger, showing 528,000 workers added. So remember, if the jobs, remember the Fed, dual mandate. Inflation, keep it down. Jobs, keep it in line. If inflation's too hot, they won't cut rates. If jobs are too are strong, they won't cut rates. That is the worst storm. We don't want really strong inflation, really high, and we don't really want a really strong labor market. If you're looking for rate cuts, if you're looking for the market to go up. But what we just got this week was a really strong jobs market, which means they don't actually have to cut rates. If we get a really strong, or if we get a really high inflation report or higher than consensus, then again, there's not going to be potentially any rate cuts in 2026, or maybe just one rate cut. So we're coming against a very strong backdrop. On Tuesday, we got massive jobs. The only thing that worked in our favor, or the market's favor, and the reason we didn't get a big correction based off that jobs data is because of the revisions. The revisions that we got was much higher than we expected. So revised 2025 jobs forecast averaged just 15,000 per month, down from reportedly 49,000. The JOLTS report, February the 5th, showed jobs earnings plunging to 6.54 million, the lowest since 2017 outside the pandemic, while ADP private payrolls came in at a meager 22,000 plus. Challenger reports reported 108,000 job cuts announcements in January, the highest for that month since 2009. So that we do have a lot of sort of conflicting data, revisions. So it wasn't just a terrible news story of how many jobs were added. The Fed is going to look at that and say, actually, the jobs market's pretty strong. But remember, the reason the market didn't crash is because there was actually a lot of revisions, and there is still signs of weakness in the jobs market. You can't just look at one of these data reports and say, wow, so many jobs added, we're gonna crash in the market because there's not going to be any rate cuts. You have to look at the backdrop, the revisions, the other reports, the ADPs, and actually go, maybe the jobs market's a bit stronger than we expected. We're not really expecting that many rate cuts in 2026, but it's not as bad. It's not warrants a big crash at the moment. If we do get a really high inflation report today, then yes, people are going to look at that big strong jobs report on Tuesday and go, wow, the jobs market's very strong. Then they're going to look at inflation and go, wow, inflation's very high. What are the Fed going to do? Well, they're definitely not going to cut rates. In fact, we might end up in a situation when over the next few months, we might get really high CPI due to tariffs and people pricing in that tariffs are not going to go away in the Supreme Court decision. And we might also get a really strong jobs report, which actually might start, the market for the first time in a while might actually start pricing in a small chance of a rate hike. If that starts getting priced in, that could be another reason I'm expecting a correction this year and move down. So it all starts with CPI today. If you have just tuned in, please hit the like button. We are 10 minutes away from the CPI numbers. Let's move further with the report. There is a poll running in the live chat as well. Do check out the newsletter. I have put the link in the live chat. It's also the first link in the description. So where does the Fed stand and what are markets pricing? The federal funds rate, remember this is where the rates are. This is the short-term rates that the Fed cut or raise, sits at between 3.5 and 3.75%. They didn't cut rates in January 2020, January the 28th in the last FOMC because 10 people voted not to, and only 2 people voted for rate cuts. The 2 dissenters were Governor Waller and Martyn. Both voted for a cut, making them the most dovish voices on the committee. Fed Waller, the pro-crypto Fed chairman, stated that 2025 saw 0 job growth and described the labor market as not remotely healthy. Martyn has called over 100 basis points of cuts in 2026. So we've got some people in the Fed calling for a lot of rate cuts, 100 basis. Are we back? Someone let me know in the chat. Yes or no? Are we back? Are we back? Yes or no? Yes or no? Are we back? Are we back? Are we back? We're back? We're good? Are we back? Yes or no? Where does the Fed stand? So the federal fund rate is at 3.5 to 3.75%. We are back, aren't we? Yes, everyone's saying we're back. We're back. Yeah, we're back. We're back. So yeah, Fed Chairman Powell, he said it's all about the data. We're going to get a big data. Someone said no sound. Can we confirm sound is good? Yeah, sound is good. Yeah, we're back. God, that would have been a bad time for the show to end. CME Fed Watch. So again, this is what we expect for the whole year. We went through this a little bit earlier. I'll reiterate it. These are the probabilities of where we end the year. And today's CPI report that comes out in 8 minutes and 12 seconds. Yeah, sound is great. Sound is good. Sound is good. Thanks, guys. Okay, brilliant. This is the chart that shows you where we're going to end the year or where the market expects it to end. And this will change drastically after today's CPI report, especially if we diverge from consensus a lot. So by the end of the year, there's a 5% chance we'll have no rate cuts. The market hasn't priced that in. If there is if we do have no rate cuts, the market will be a lot lower if we're taking that by itself. One rate cut is 21%. Again, that's not what the market is pricing in. 32% chance of 2 rate cuts, 25% chance of 3 rate cuts, 14% chance of 4 more rate cuts. Again, today's CPI, if it's higher than expected, if we get a hot CPI, the market will start pricing in no rate cuts more, 1 rate cut more. And that's essentially why the market will crash, because less rate cuts, less liquidity. So where does the market sit right now? The stock market is in the middle of a little bit of a sell-off, driven by AI disruption fears, driven by the new Fed chair being a little bit more hawkish than expected. We're seeing Apple down, we're seeing the Magnificent Seven down, we're seeing the value side of the S&P 500 keeping the markets up. Let me actually now bring this on the screen as well. We'll be keeping an eye on the markets as well while this is unfolding. Let me move that a little bit, make it a little bit smaller for now. So stocks, we're starting a sell-off. This is the making of a sell-off, and what can save it is inflation being really low. Hello. Can anyone hear me? How long was I muted? Why did that happen? You guys can hear me again? God, what's going on today? Save it. You guys can hear me? They'll just... Oh, people are trolling. If you can't... Is someone trolling? Someone actually made me think there's no sound. Refresh if no sound. Refresh if no sound. We're good. Okay. Someone was trolling and I fell for it. How stupid am I? Guys, can everyone if you can hear me, can everyone let the people that... Some people aren't trolling. Sometimes this happens on YouTube. Can you guys please let everyone know to refresh if there's a sound issue? Okay, so the stock market, it looks like it's in the beginning of a sell-off. XRP has just gone off, going up. S&P 500 going up. Beginning of a sell-off, it's giving that sort of feel. Thank you, Franklin Muff. That's very kind to do a super chat to let me know. Let's listen to this.
At Franklin Muff tipped $10 through super chat. Sound is great. Person trolling chat.
Thank you. Yeah, if you're having issues, refresh. Thank you, Franklin. Really appreciate it. S&P 500, it's starting its sell-off. AI disruption fears, the new Fed chair being a little bit more hawkish than the market expected. So that's what we're in the midst of right now. Remember, if the trend is breaking and the trend is towards the downside like it is right now, you don't need as much bad news to continue the trend going. You need more good news to reverse the trend. Right now, we're starting a downtrend in the stock market, and this is what we've been expecting for the year of 2026, is a downtrend. So right now, that downtrend has started on the S&P 500. It started with AI. It started with the Magnificent Seven, and we're starting to see that downtrend. If we get a bad CPI print, and again, I'll reiterate the numbers. This is the consensus numbers. If we get a hot CPI print, and that is month on month being above 0.4% and year over year being above 2.6%, it can easily keep the trend going. We need a really good cool print to suddenly go against that trend, because the trend has already started towards the downside on the stock market. So if we get anything to give more fuel to that fire that's coming down, then the markets will drop fast. So keep an eye on. I'm more worried if we get hot print, we'll very much continue that sell-off, and that could be the start of the bear market, the drawdown, the 10% correction, the S&P 500, or whatever you want to call it. Crypto as well. We've got crypto in the middle of no man's land. We've got Bitcoin between support at around 60,000 and its resistance about 75,000. Those are the two main levels we've been watching on Bitcoin. 60,000 where we bought near the 200-week moving average. 75,000, the level that broke, the level in the sand that broke. Those are the levels that we're looking at. We're in the middle of no man's land. If we get back above 74,000, then great, brilliant, off to 100,000 or whatever you want to say. If the print is not good, then we can drop down 60,000 very quickly, especially the weakness that the crypto market is showing right now. Remember, Ethereum is down worse. Again, Ethereum has a lot to drop as well. My thesis for the stock market is we're going to come down 10, 15% at some point this year. The crypto market is going to go sideways, maybe be volatile within it, but at some point, maybe in May and in October, we'll have secondary flushes and have the final capitulation in the crypto market. So we're keeping our mind open for that as well. But again, anything can happen in the short term, and today is a very short term thing that can affect the long term. Bonds as well. Again, this is all the cheat sheet. If you wanted this whole cheat sheet every time these events happen, or if you wanted to follow along, you can just grab the newsletter. It is completely free. There's a free trial, 7 days. There's a free plan as well. And there's also a premium plan. So you can choose to go monthly, you can choose to go free. There's lots of perks and benefits in the newsletter. You get all your news. Again, all the traders, all the investors. The most important thing is getting the news every day. And that's a big part of the newsletter. Every single day, 2 hours before the opening bell, you get the full news breakdown, the 5 things you need to know every single day. You get it as part of the newsletter. You get the £5,000 portfolio challenge. I'm starting with £5,000. I'm releasing my full playbook, the way I bought Tesla at $10, Rocket Lab at $10, Robinhood around $10, XRP at 30 cents, all of these things that are up 1,000% since. I'm releasing the full playbook and I'm integrating it in a £5,000 portfolio challenge with my full research. You can get that as part of the newsletter. You can also get, the 5 things you need to know every day, the deep dives, the net worth tracker. You get all of these things as part of the newsletter. So definitely go and check it out. There's also even a free plan. So there's no excuse for no one to get it. It's the link in the live chat. It's in the first link in the description as well. So there's different components inside the report. So 35% of CPI is to do with shelter. So we'll keep an eye on that. We'll be bringing Bloomberg to you in just a second. Food is a big part. Energy, core goods, service inflation. Again, tariffs is the big elephant in the room. We're waiting. We're going to be covering that Supreme Court decision. But right now, tariffs have surged to the effective tariff rate is about 13 to 16%. 1 minute away from CPI now. So again, we're going to hear things about tariffs as well. There's more information. If you wanted the full information, you could have read the full PDF we put inside the cheat sheet. But the main things to take away from most people is whatever happens today is going to affect this, the scenarios of how many rate cuts we get this year. For the market to go up, we want a call print. Remember, the numbers are, and we're going to be bringing it from Bloomberg and also here. The numbers are 0.3% for both month-on-month figures, 2.5% for both year-on-year figures. The lower it is from that, the more likely the market's going to pump. If it's the same as consensus, the market will rally a little bit. But if it's higher, if it's 2.7, 2.6, then we can get a big correction in the market. That's what we need to keep an eye out for. Let's go over to Bloomberg. Let's make sure they're live. If you are watching, make sure you've got the red live button on us.
And we stand behind it, and we will.
Let's fast forward this. 2 speed.
Senator, appreciate your time. I know it's loud over there. Enjoy Europe. Thank you very much, sir. Senator Tom Turner on the Federal Reserve, on China and relationship with the Europeans. Just ahead of CPI data, if you're just joining us, welcome to the programme. Equities at the moment into that data, just a little bit softer, negative by 0.2% on the S&P, on the Nasdaq down by 3.
Here we go. Okay, let's get this.
A headline on Alibaba 15 minutes ago.
Yeah, coming out and saying that
any second now, inflation report. Let's go straight to it.
Right there, was saying, of course they are, and how can you really extricate these? But designation like that has serious market implications, and that's the reason why those shares are so much lower.
That stock is down by about 4%.
Okay, CPI month over month is 0.2%, year over year is 2.4%. That is CPI core is as expected. The market is going to rally. This is great news. This is what we wanted. Markets rallying. Everyone hit the like button. Let's go straight to Bloomberg for the new full coverage. We got that news to you before they did.
7% on an annual basis. The 2.7% was for December. Remember, there's some things you got to think about with these numbers because of the fact that we didn't have any October numbers, and that biases all of this. Core CPI comes in up 0.3. That's more than the December 0.2, but it's what the market had forecast. On a year-over-year basis, we're up 2.5%. That's down 1/10 from 2.6% in December. So a little bit better news there overall for the markets, but still, when you look at the core numbers, you're not getting a whole lot of progress.
Core hasn't been lower than expected, but it's at consensus. This is good for now. Let's listen in. I'll give you my full thoughts in a second.
In December by 0.7. So we have to see here. We get the updated numbers for January. Food prices just rose by 0.2 during the month. Food at home by 0.2. Big drops down from what we saw in December. Gasoline prices were down 3.2%. That's a big weight on all of these numbers. And used cars down 1.8%. New cars up just 0.1%. And apparel prices up 0.3%, same as the month before. So a lot of the big contributors to CPI coming in softer than anticipated. See why we see the headline number come in a little softer than economists had expected.
Mike McKee will take that. Thanks for the update. Appreciate it. Stay close. Downside surprise then, small one on headline CPI, 0.2% month over month. The survey was 0.3. Our survey here at Bloomberg, the median estimate for core was 0.3, in line at 0.3. I guess that's good news. Push it through the bond market. Yields drop at the front end of the curve. We opened this week at 350. We pushed higher off the back of hotter than expected payrolls. And then this morning we're down again by 4 basis points, 341 at the front end of the curve. Further out along the curve, 10s with a break of 410. Yields down by 2 basis points on the session now at 4.07, and basically at the lows for the year, Lisa, on a 10-year maturity following that softer than expected CPI print.
Okay, 0.1%.
Okay, so let me just give you my thoughts. We'll come back to Bloomberg. What we've just seen there is good. It's not great, but it's pretty good. The market is obviously rallying because the algorithms are there pushing it up. I do expect the trend to sort of continue to the upside, at least in the short term, over the day or two. Again, we're going into low liquidity event. On Monday, the markets are closed. President's Day. It's a low liquidity market right now, so we're going to see volatility in the markets. Would I say this is going to change the game? It's not amazing. Again, we need to keep this in line. The CPI data was expected at 0.3. We got 0.3. We got 0.2. Year over year was at 2.5. We got 2.4. The core, excluding food and energy, was actually at consensus, so nothing great there. So essentially, we've got slightly better than expected. The markets are going to rally again. As I told you, you look at those numbers quickly and you can see where the market's going to go. We gave it to you all in the cheat sheet. So again, there's more information in here. We put this into any newsletter where there's a big event going on. CPI cheat sheet, we told you about the headline. We told you about what to look out for. We told you about the jobs report. There's more information, the rate cut information, where stocks, crypto, all their supports are, and what to look out for, the tariffs, the key levels of support for each of these things. That's all in the newsletter. Remember, every single day, and I'm going to tell you this quickly and then give you my thoughts on everything, we've got our own newsletter, sensei.news. Every single day, I spend 4 or 5 hours researching the stories of the day. I tell you them in a quick glance. The top stories today was Trump, Coinbase, Rivian, the CPI print. I tell you the one big thing, the fear and greed index is there. This is the best newsletter. I wish I had this 4 years ago. I wish someone created this, but no one created it, so we did. Every single day, you get the updates, the winners, the losers, the market snapshot, then a deeper dive into the top 5 stories. Again, as soon as I started subscribing to Financial Times, The Economist, Bloomberg, Market Watch, all of these things, and started reading stories, I got better at investing because I understood what was going on in the market. But again, I had to pay thousands for subscriptions or hundreds for subscriptions. There was too much noise in it. There was too much political narratives. So we created our own newsletter where we just tell you the 5 things, because you only need to know 5 things every day. So we give you those 5 things. Then we give you the deep dive every day. So if you scroll down to today's newsletter, in the deep dive section, we gave you the full PDF, which was everything about CPI, the cheat sheet. And then every single day, you get my chart of the day. That's just a tiny part of the newsletter. You also get other deep dives. You get emerging technologies within the deep dives. You get the £5,000 portfolio challenge. You get every single one of these perks and benefits, ad-free experience, my thoughts, the charts of the day, the cheat sheets for FOMC, CPI. You get the XRP weekly newsletter. You get the financial planning tools. You can message me one-on-one. You can you can be part of the private community. You can see when I'm buying. Again, it's not financial advice. I don't do that. I just tell you what I'm doing and give you the full research. How do you get it? This is the link. Click on that. There is a free plan. There's a 7-day free trial. There is a monthly plan. There's a plan for everyone. So everyone should be clicking on that link, especially if you are investing in the markets, especially if you want to be a better investor, and especially if you want to be part of the private community as well. So free plan, there is a free trial, there's a monthly plan, there's a plan for everyone. Okay, let me tell you my thoughts on what we've just seen unfold. We're going to get volatility, we're going to get ups and downs. The trend, in my opinion, is going to be a little bit towards the upside. What did we just see unfold? Where we saw the fact that one of the CPI prints, again, CPI is the one the market looks at the most, PCE is what the Fed prefers the most, and PPI is what forward lookers look at the most. We got a slightly cool CPI print. So again, what does that mean? Well, we got a really strong jobs report on Tuesday. We got a slightly cool inflation report. It doesn't really mean much. I don't think the chance of rate cuts are going to change much because we got that strong jobs report. If we got a weak jobs report on Tuesday and then a cool inflation print today, then yes, the markets could rally. And I could say actually my consensus on the market going down this year is wrong. We can get quite a few rate cuts. I don't think rate cut expectations are going to change that much. I don't think we're going to get 4 rate cuts this year. I think we're going to get, the Fed is saying 1, the market's saying 2. I would also say probably 2 rate cuts this year. That could change, by the way. We can get a CPI print next month or a jobs report next month that says jobs are really strong. CPI is still staying pretty high and tariffs are playing a bigger effect into it. And then we can actually get no rate cuts or potentially a chance of a rate hike. So I wouldn't say this is the best news in the world. I'm not going to go all out. I've got my levels of support, which again, I put in the newsletter. I'm looking at around 60,000 for Bitcoin. I'm looking for a bigger flush out. I'm looking at the S&P 500 going into a 10% drawdown. I'm looking at the utility sector, the consumer stable sector, the healthcare sector, and I'm publishing that as part of the £5,000 portfolio challenge. I think we need to be a bit more resilient this year. Open up positions that can survive this year and get great prices on great assets this year. I don't think the print we got today is going to change the way the market is right now. The AI is starting to crack, even though I think it's the best technology ever, and it's going to change the way the markets are priced. And I think it's going to be revolutionary. There's going to be a time without AI and after AI. I'm still very bullish on AI, but there is cracks within AI that can start a scare and market participants getting a little bit scared, and that's when we can get a little bit of a move down. I think the crypto market has had its first sort of move down. Do we have the chart? I don't have the chart on the screen. Anyway, had its first move down. We expected that capitulation. We bought at the 200-day moving average. We made 80% on a day on XRP. That was all in the newsletter as well. Anyway, I think we're going to have the crypto market. It's capitulated slightly. We're going to have a rally. We're going to have volatility. In May, I expect the crypto market to flush out those lows, go even lower. Bitcoin go below 60,000, XRP go below $1. Maybe a final flush out in October as well. Open up some great positions going into the end of 2026 and 2027, opening up those positions. I think the S&P 500 is also going to have a move down, whether it's a recession, whether it's a carry trade. We're prepared for all scenarios, or whether it's just an AI crack that's going to bring us down. I want to open some great positions up as well. We'll be looking at MicroStrategy, Bitcoin, crypto later in May, opening up some big positions there, and also the stock market if it does have that correction. I don't think today's print is going to just completely get rid of all the problems in the market right now. I think it's a great little push up. Good luck to all the traders that are going to take it. Certain resistance, but be prepared for the continuation of the move down. The news wasn't good enough. Again, I would love to just come out and say, wow, CPI was great. It was great in the short term. Yes, we think it's great. Short term, it might pop off. But it's not market-changing behavior. It's not market-changing data. It isn't anything that's massive that's going to change the trend of the market. And right now, the trend of the market, whether you're looking at stocks, crypto, commodities, is towards the downside. So I believe that trend will continue going towards the downside. Let me have a quick look at your comments. Has everyone signed up to newsletter? Yes or no in the chat. Have you signed up to newsletter? Yes or no in the chat. Let me give you this. Newsletter link is there's literally, you click on it, you type in your email, there's a free plan, there's a monthly plan, or there's a free trial for the annual plan. Choose which one you want. Even the free plan is worth it. The annual plan, I'm sure you would take so much knowledge out of it. If you are an investor in the markets, you need to have a resource like this. There's so many tools that you can add to your toolbox within the newsletter. It's not just one thing just with the news. There's so many different elements to it. So let me know in the chat, yes or no, did you get the newsletter? Let me answer some of these questions as well. This isn't news I would buy on. Neither for me. I'm not looking at that and going, wow, the market. This is market changing news. I don't think so. Gold and silver surging is not a good thing. Why do you say that, Dan Ackerman? Gold and silver will go up based off rate cuts are great for gold and silver as well because they make them more attractive. So today we got some information that we're getting more likely to get rate cuts, or at least we're not going to get rate hikes or holding rates for this year. That's what the information today showed us anyway. So again, that's good. I can hear you. Brilliant. Thank you, Sensei. 2.4% so long. Guys, if you have any questions, leave them down. Joe Parson hasn't got the newsletter. What is going on? Well, I'll give you the link. You can click on it. Let me pin it to the top as well for anyone who hasn't got it. Let's go back to Bloomberg. Let's see what they're saying for just a second. This was a surprise downside print for CPI, but nothing life market changing
that we've seen of late.
In this market, inline is good news.
Evidently.
Let's just go with inline and, good news.
We've been too negative. I think this is great. I'm embracing the disinflation, and so too is the market.
You're just getting close to the weekend, 20 minutes away. You know what this is about. Mike McKee's still with us. He's standing by. Mike, you're looking for the details. What jumps out for you? Is this a good print?
I wouldn't go so far as to say I would trade on more Fed rate cuts because of this. There are some signs
this is exactly what we said.
A little concerning.
Guys, we're better than Bloomberg. We get you the information sooner. We told you our thoughts sooner.
As Lisa said, used cars and gasoline. Services prices were up 0.4. And then underneath the hood, you see tariff effects. You do see them. We see household furnishings up 0.7. Appliances and laundry materials, washing machines up 1.3%, video and audio equipment up 2.2%, computers and software up 3.1%, and these are month-over-month gains. So we are seeing companies start to roll out price increases on things that have been tariffed.
This is the tariff shock coming into play.
Thing, which is what Chris Waller has been arguing, or is it, as others in the Fed have been concerned about, something that's going to keep prices going up for a little bit? When you look at Supercore, take out housing, and Tiffany mentioned how housing had gone down, it's still up 0.6% on the month. So we are seeing prices rise for things. And remember, this is CPI. There was no October CPI. The Labor Department put that down as a 0 for the month. So CPI is biased lower. Next week, we get PCE for December. And according to the Bloomberg survey,
make sure you tune in for PCE. That's what the 3%. Fed is going to be looking at.
3%
we'll be live on the channel with PCE next week.
PCE, which is the Fed's target, that the Fed is going to want to build a case for cutting rates on.
Yeah, the hawks of the Fed aren't going to like that. Mike, thank you, sir. Mike McKee, can't get away from the gloom. You tried and Mike just brings you back in.
I'm just depressed now.
Right?
I don't know how. I mean, he's got some good points there, particularly about gasoline, because gasoline's inflected upward, seeing tariff pressures. Nonetheless, that housing component, do we really believe that? Are we measuring it correctly? So that's where I'm going to get my optimism. Rents have been stabilizing.
You're not alone. That's where a lot of pushback comes with regards to the official data. Equity still just about positive, up by 0.1% on the S&P. Outperformance on the small caps, the Russell, up by 0.4. In this market, anything could change in the next 5 minutes or so. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief. Recapping the data, inflation coming in cooler than expected, rising 0.2% compared to estimates of 0.3. Core inflation coming in line with estimates. Elsewhere, Alibaba shares falling in the pre-market. Reuters reporting the Trump administration expects to add the company to a list of firms helping China's military. According to the report, the list doesn't impose sanctions. It signals White House concerns about the company. And finally, Rivian shares soaring in the pre-market. The EV maker surprising investors with strong fourth quarter results and its first ever annual gross profit after years of consistent losses. Their stock is higher by 26%. And that is your Bloomberg Brief. Up next on the program, Jim Karen and Morgan Stanley. With inflation coming in cooler than expected, plus Danny has your morning movers. Wendy's shares falling as the company struggles to keep value-focused customers. That stock is down by more than 4%.
Okay, let me give you a recap of what we've just seen uncovered, and then we'll go into some individual stock charts as well. If anyone has any individual questions, leave them in the live chat. We go through all your questions, and also leave any chart requests in the chat as well. And then we'll be going over to Martyn for the opening bell show. So stay with me. Let me give you my full thoughts again. Give you some charts as well. We are seeing a slight sell-off. This is what I told you. I didn't say that. I told you this isn't the best news in the world. I do expect short-term upside, but I'm not this isn't market-changing news we got today. It's great to see. It's exciting. It's lower than expected. However, the market is not in a good place. The market is not in a good place. We can get short-term rallies, medium-term rallies, but I'm not looking at high-risk equities as part of my portfolio right now. I'm not looking at adding more to my crypto position because I think we're going to go lower. Is it good for metal market like gold? Yes, that news is good, because what does that news tell us for markets like gold and silver? And I expect they're already up. Yes, they are up on that news. Is the fact that it means that we're probably not going to get rate hikes. It also gives a bigger chance for rate cuts. And rate cuts are great for commodities like gold and silver. Why? Well, because gold and silver, if you can get a very risk-free return on a treasury bill in the US of 3%, 4%, then gold historically only goes up 4 or 5% a year. Again, we've had crazy years, and we expected this and we predicted this. But if there is rate cuts, it makes gold and silver more attractive, because there's not just free money in treasury bills that have high percentage gains. It makes gold and silver more attractive, just like it does with crypto and stocks. The same applies to gold and silver. So if we get lower CPI, it just means we're more likely not to get a rate hike. We're more likely to get rate cuts. And if we get rate cuts, gold, silver, crypto, stocks become more attractive. Bonds become less attractive. Anyway, that's gold right now, up 1.21%. Again, remember, we talked about gold on the newsletter so many times. We predicted gold at 1,500. We bought it at 2,000. We were predicting breakouts throughout 2025. Towards the end, we predicted a $5,000 gold in the beginning of 2026. No one believed us, and we got there. Silver, we were even more bullish on. We predicted this at $15, $20, $25, $34. We gave a big breakout newsletter on it as well. And again, it went up all the way to exactly, again, this is not me changing charts, go back and see it, exactly to the cent of our final target of $120. Literally, that's where it peaked out. And where did it stop? And where's it finding support? Exactly at $74, where we predicted. So again, all of these charts, all of this analysis is in the newsletter. You can get a 1-week free trial. Go and check it out. I'll put the link in the live chat. It's also pinned. So silver is rebounding. It looked like a good buy around $74. Again, the risk reward is not what it used to be, but it's still great. I would be a buyer of silver at $74, at least for a swing towards the upside, because I do think silver will make a lower high, maybe go to $100. I think gold might make a higher high, and then that will be the commodity cycle over and done with, and then we move on to the next thing. Anyway. The S&P 500 is now actually moving. It's still down on the day. The S&P 500 is something I'm predicting to go down to 7,000 and then come back to our parallel channel, which we've been tracking for years. This is the area where I think the S&P 500 will be in value. Remember, the S&P 500 over time goes up. So you can't just keep predicting prices of 2022 or 2018 or 2020. It's never going to go back down there unless we get a horrible event in the market, which, again, the stock market, your investment in the stock market wouldn't mean much at that point, because there's obviously something terrible going on in the world. Anyway, so I think the stock market, the S&P 500 will become of value around 6,300, 6,171. I think we'll fall back down into this parallel channel in 2026. So I am waiting for lower price on the S&P 500. But again, for most investors, just keep buying the S&P 500 over 5-10 years. You'll probably be up. For me, I like to buy it at better values, and I like to also be able to trade it. So for me, the S&P 500 is not a buy right now. Bitcoin, I bought at 61,000. I bought at 60,000 XRP. I bought at $1.10, $1.13, $1.14. Around the 200-week moving average. I did expect that big move up. That's why I sold to my XRP, but I am expecting a flush out in May, a flush out in October, bring the price down lower, even maybe to 64 cents, 90 cents, a flush below $1, buy some better prices for XRP. Bitcoin potentially to go down to 50,000, 48,000, at least back to its 200-day moving average at 58,000. And then I'll buy some more Bitcoin. Again, Bitcoin is not my favorite cryptocurrency, but it's the king of the cryptocurrency market, so you have to respect it. Ethereum, the same. I do expect a bigger drawdown on Ethereum, potentially even below $1,000 or maybe $1,400. I'm not looking at buying more at these levels. I'm expecting a secondary flush later in the year. Of course, who can predict the short-term volatility? It's going to be volatile. It's between two levels. It can jump up 20%, and someone might come on tomorrow and say, you were wrong. You were expecting a downturn. Well, I expected a bear market 6 months ago. Everyone called me crazy, and now here we are. I am expecting a further downtrend. That's not me saying in the short term we can't have crazy volatility. We do. It's the crypto market. It's the volatile stock market. But my consensus, and this is where you can criticize me at the end of 2026 and go, you were completely wrong. My consensus is we'll have a downturn on the S&P 500, moving lower, but also having a secondary flush of the crypto market, having lower lows on the crypto market, having that secondary flush. That's what my expectations are, and that's why I'm going to be giving all the reports in the crypto in the newsletter to give you my thoughts, the £5,000 portfolio challenge, why I'm buying, when I'm buying. Just to give you some more research and my thoughts. Again, do with that what you will. Let's go over to some questions as well. Let me just go back to Bloomberg. What are they covering right now?
Questions potentially to renew USMCA.
That's going through some stocks as well. We've got all the top movers in our very own newsletter. For anyone who's just tuned in, we've just covered CPI. It was better than expected. At least there wasn't a high print. Otherwise, we could have got a crash again. The good thing about today's report was it brought some more stability to the market, because if we got a higher than expected CPI print on the month over month or the year over year, what would have happened is, because the trend is towards the downside of the market would have taken that data and would have brought it down a lot, because we've got local liquidity, because we've got that extended holiday on Monday as well. The market would have brought that down a lot. The thing that saved the market today was the fact that one of the CPI prints was lower than expected, cooler than expected at 0.2 instead of 0.3, and the year over year was 2.4 versus 2.5. The core CPI was actually at consensus, so nothing too special there. But essentially, it means the market is propped up for now until the next report or until the next thing breaks in the stock market. And maybe it doesn't, and that's why I'm still positioned the crypto market and the stock market in case my whole thesis is wrong. I'm still positioned, so I win either way. That's why I always try and preach. Understand the news, and be prepared for the scenario to go up, down, or sideways. Anyway, how do I prepare for that? Well, I look at all the news every day. I look at the technicals. I learn about charts. I look at the portfolio challenge. I spend hours researching. My whole life is essentially research now. So if you want to get 8 hours of research condensed down to 15 minutes so you can read it every single morning, then get the newsletter. There is a free plan. There is a, I'll give it to you in the live chat. There is a free plan. There is a monthly plan. There's a yearly plan. Go and check it out. That actually gives you a free trial to the premium plan. That link. Someone said USOR chart. USOR chart. Let's have a quick look. A very, very quick look. USOR. Okay, that doesn't exist. I don't know what you mean by that. There is no USOR. So we can't look at that. Correction incoming right after opening bell. Why? Check gold, says Vocal Foster. As always, Freaky Friday, full volatility, and Sunday fun day. Closing the weekly candle. Yes, we love the weekly candle on crypto on Sundays. The weekly candle closes on Fridays on the stock market. But yeah, it looks like Monday will be a extended holiday, so expect low liquidity today. Coinbase chart. Someone asked for the Coinbase chart. Let's have a look at Coinbase. It's coming lower. I'm getting excited. The Coinbase was one of our best ever trades. A few years ago, we bought Coinbase at $40, I think, or 44. Yeah, if you go back, there's a video I put out. I think Martyn was live. I sent him a super chat. I said Coinbase is going to be your best buy. I sent a super chat and I said buy one share of Coinbase. That was at $40. Our official trade was at $55, and we took that trade all the way up to $350. So again, that's an incredible trade as well. Will we ever go back to $65? Probably not. That was a 441% move in like a year. That was incredible. Coinbase is starting to go more and more attractive. I mean, I wouldn't even mind putting the trigger on some shares, but again, I'll have to do a full research report, compare it to other exchanges, and then see what the best buy is, because we've got more and more crypto IPOs. So it's Coinbase might not be the best numbers wise, but again, I think Coinbase over time will go up. It's at 141. No technical support right now. It could be. Yeah, I mean, there's a potential of a double bottom out, a bounce around these levels, but we've already got a bounce in the pre-market, so there's the bounce. Yeah, it's not a bad place to start DCAing, but I'll be very, very interested closer to $117. Let's just have a quick look at the Fibonacci on Coinbase as well. Remember, they reported earnings yesterday. We've got a piece in the newsletter about them. Maybe 120 as well. 120. Yeah, I'll look. If I wanted to open a position on Coinbase, I'll DCA where we are now at 140, 120, 82 as well, if we ever go that low. So I'll be definitely buying at 82, but if I wanted a position now, that's how I would DCA into Coinbase. Let's have is it good for metals like gold? Yes, it was good for metals like gold. Typical mini pump, then dumping crypto. Ubisoft. I don't actually know what this company is. Euronext Paris. It's a small company. It's $500 million. I don't think anyone will be interested in this, and I don't think it's worth putting our time into that. That's something you more look at the fundamentals and the charts. I won't invest in Coinbase, says Dan Ackerman. It's a Tony says Robinhood is bouncing pre-market to $73. Let's have a look at Hood. Hood. Hood is up to 3%. Yeah, I mean, our support's $68 on Hood. But again, remember, we bought, this is where we bought Robinhood. We bought Robinhood at $10, $11. It's $8, $7. So yeah, I can't really bring myself to buy Robinhood at $71, to be honest. Although that's probably a bad way of investing. You need to look at the numbers and reassess. Are we at value or below value? So yeah, Robinhood is certainly a better buy than it was a few weeks ago, where I certainly wouldn't be buying. It hit our last target of $133. Again, that's why charts are important. It keeps emotions in check. I sold at $133 and now we're at $71. Brilliant. Yeah, it's looking more attractive now, but again, you'd have to look at the numbers. The support on the chart is $68, but below that is $45. It's a tiny stock. Yes, it is a tiny stock. It's a tiny WGRX is a request. Apparently, it's a tiny stock, but they use XRP, Logistics Health. Again, not much to say on the chart there. You would have to look at the fundamentals. The chart would say that the stock's going to zero. But again, it's $25 million. If it's a tiny part of your portfolio, it could be pretty cool. Again, I don't know much about the fundamentals, but the charts won't tell us much. Back to the live chat. It's a tiny stock. Great show. Do you think XRP will ever get back to £3? Yes, I do, Jim Ricketts. But we might significantly go lower before we do get back up there. That's my thought. Yes, I do. Forever Blue White. What about PGY after their massive earnings drop? And we'll look at one of them. PGY, Papa Yaga Technology. Again, is this a tiny market cap? Yeah, it's under 100 billion. It's not a tiny market cap, but it's pretty low. Again, look, the chart's only one part of the puzzle. I love charts, I use charts, but only after I know the fundamentals of something. But if we're looking at just purely charts and technical plays, which again, that's one strategy. It's not my strategy, but it's one strategy. Let's look. I mean, this formal support's about $8. That will be a certain level, but the 7, yeah, you're looking. This looks like it's going to be trending down all the way down to $8. But again, if the fundamentals are great, there's no reason not to buy at $12 waiting for $8 because it'll be a long-term hold. But for me, if I'm looking purely based of stocks, technicals, without fundamentals, I'll be looking at $8.20, $8.50, somewhere around there for at least a bounce. Let me go back to live chat. Great show, thank you. Why would Coinbase be a good buy if cryptos predicted to go further down? Cameron Griffin, I think XRP is going to go further down, but I bought XRP at 130. Why? Well, because I don't mind starting to dollar cost average. I think there will be, I think in 2 years' time, 2 years' time, 130 on XRP or $1.10, wherever I bought, is going to be a great buy. So I'm not just going to be out in the market waiting for lower prices if I think these prices are great for the future. But I also want to buy the bottom as well, buy lower as well. So I start to DCA at levels where I start seeing value and I start going, actually, the risk reward is quite good, so I might as well buy. And also, who knows? Maybe the bottom's in. Maybe there's a 10%, 20% chance the bottom's in. I think we're going to go lower, but maybe we don't go lower. I still think in 3 years' time, XRP is going to be $3, $4, $5, something like that. I still think in 3 years' time, Coinbase is going to be higher than where it is now. I still think in 3 years' time, whatever. So I still want to be in the market, but I also want to make better gains. So I get in the market and I buy as it goes lower. Hopefully, Cameron Griffin, that answers your question. Hood, 30 minutes more. What do you mean? Oh, let me turn this on. I think Martyn's calling in. Yes, we do have Martyn. We have Martyn calling, and that's going to work now. Let me see if I can bring over Martyn into the show. Let me go here. Oh, brilliant. Martyn, welcome to the show. Let me sort that out.
Good morning, Sensei. Thank you very much for picking up the slack this morning. I had a technical issue. I had a crash just before I started. I had to reboot everything, and then it came through wrong. My audio was wrong. So I missed the biggest inflation report of the year, but I do have some good news. One, we're fixed, we're back, everything's running as it should be. Thank you for picking up the slack, and it's wonderful to see you back here with us today. We know you're going through some difficult times at the moment, and with with things that are going on with you and your wife, and all our love goes out to you, and we're so happy to see you here today. So thank you for that.
Thank you very much.
I've got some good news. So at 1:15 a.m., I was up all night last night. I had some really good contacts from the Bank of America last night, and it was spot on as well. If you were in Electrum last night, and if you were in Discord last night, you would have seen at 1:15 a.m., I told you live, there's a rotation happening. It's happening live right now. The last few weeks, you've seen me sell all of my Coca-Cola. I got out, I took a profit. Remember, I focus on buying the bottom, never the top. No one can get the top, but you can buy the bottom if you consistently buy with lots and then trade them up when they go up. So you always make sure you get the bottom. I was very confident in $80 for Coca-Cola. I was solidly confident of that, and it was spot on, $80. It went there. I sold it around 78. I didn't quite get all the way to the 80 because everyone's going to sell and we're going to get rotation. Now, last night, well, just before that, so the last few days, I started buying very heavily into XRP. I'm now a double whale, over $100,000. I've also got a big position in Ethereum, and I started to buy very heavily in Robinhood and Google. Remember, Robinhood is a tech play, and Google has some good news with AI payments. There's some rumors around X and Elon Musk and XRP. None of that is verified, but people are getting excited about something and nothing. But the point is, I'm very happy to own Robinhood at these prices. Even Kathy Wood, who you know I don't like very much, Sensei, she decided to start buying Robinhood at a higher price than me. I got a better deal than she did. Probably, don't really know. But anyway, when she announced it, I got it lower. Anyway, whatever. The point is, last night at 1:15, I got my confirmation. So I was up late last night in Discord and Electrum. So go back and look. And I announced to you there's a rotation happening. And all of a sudden, at 1:15 to 1:30, the banks did their usual little game. They all started to move, and things moved really quickly. We saw Coca-Cola move, defensives go through the roof, and we saw the other way around. Defensives went down, and Coca-Cola went down dramatically all of a sudden, and tech and crypto went up very, very quickly. A very, very quick rotation at 1:15, 1:30 in the morning. I told you it would happen, and it did. I was in there and I was sharing it all with you. And this morning we've got confirmation of that. We've got an okay CPI. It's still hot, but it means we're more likely to get rate cuts. And you saw straight away, we saw a little pop on crypto, Robinhood and Google. Now my portfolio is up $4,000 today. This could be a $20,000 day today for me, because I've gone $250,000, $250,000 in Google, expecting a 20% pump on it. You heard me right, 20%. This is a 20 grand day. And I'm also expecting 27% on Robinhood from where we were 2 days ago before we came down even lower. So over 30% on Robinhood. So these are my thoughts. These are my price predictions. This is what I've done. I shared this with you live in the morning at 1:15. I said a rotation started, and it has. Now, I'm warning you. Do not follow my trades just because I'm winning and beating the market again, and we're up again. We've gone through a lot of pain. The last couple of weeks, I sold, took profit, and I got out of the S&P, I got out of Coca-Cola, and I bought heavily when I saw Google go down. I like what they're doing. The 100-year bond doesn't scare me. It's good. I like the business. Warren Buffett likes the business, and I like Robinhood at these prices, and Kathy Wood agrees with me. So at the moment, I've had a big, hard week. I'm down 35 grand, at least I was until this morning, make that now 29. But I was down $35,000 because I was buying on the way down. That's what we do. We take profit when it's time to rotate, and we start digging in. So for a while, you go down, but that's okay. We may have found the bottom, but there is more evidence also to suggest we may have had some yen carry trade unwinding. That will be revealed in the coming days. But be careful. Today is a volatile day. We've got a long weekend. Sensei mentioned it earlier. But I am very happy to be in crypto, heavily in crypto, over 120,000, I think, with my Ethereum, and a 250,000 with Google, and a good 30 or 40,000 with Robinhood. I wish everyone the best. If you want to join me, I'll be live in 10 minutes. Thank you, Sensei, for supporting me this morning when I had to reboot everything. I will share all my trades with you. But if you want to go and check and make sure I'm not making this stuff up, 1:15 in the morning on Electrum and Discord, I was up throughout the night telling you a rotation is just about to happen. And it did. And there we go. I'm glad we're in, and I'm glad we're making some money. We're beating the market again. All right, great stuff. Sensei, I'll hand it back to you, and I wish you all the very, very best of luck. Cheers, Sensei.
Thank you, Martyn. Brilliant. Lovely to hear from Martyn. As you heard from him, if you want to hear more about his trades, he'll be posting his Electrum and Discord links in the chat. He'll also be live in 10 minutes time on the same channel. So stay tuned for that. You'll see his portfolio live on the screen. So if you have just tuned in, we covered the CPI report. CPI, one of the measures of CPI came down 0.1% lower than expected. So again, the market had that initial run, but now, as I expected, the market's coming down slightly again. It's going to be volatile. Who knows what's going to happen in the short term? Again, I don't think this is market-changing data that's going to change where we are to a sudden big uptrend. Brilliant. We can see in the chat now, Martyn has just posted his Discord link and his Electrum link. So if you go on that, I think it's at 90% discount. $2.99. You can get all of Martyn's trades on Discord, and also to become a member, you can get them on Electrum as well. So would I expect the scenarios to change? This is something we put together for all our newsletter members, the whole report. This is the scenarios. These are the probabilities. Do I expect it to change from today? Maybe slightly. And which way? Maybe slightly towards the more rate cuts suggestion. So maybe it's all going to depend on PCE now. PCE is next week. That's what the Fed prefers. Once we get PCE, we can start saying what's going to happen in March. In March, right now, we're predicting no rate cut. But if the PCE data confirms what CPI says and it's lower, then we can actually get a rate cut in March. And that's when the market could go on to that little bit of an uptrend into March, and then come into May and go to that secondary low I'm expecting on crypto and the downtrend on the stock market in the longer term perspective. Anyway, let me go over to your comments as well. Actually, Sensei, Russia's thinking of coming back to dollar. Some kind of trade deal announced yesterday. Thank you, Susan Swatford. I've heard this. I'll research more and put it in towards tomorrow's newsletter. I bought over 5,000 Bitcoin. 5,000 Bitcoin way back when I was 17 years old, and I didn't know what it was. Just having some fun. I gained 100% on it. Now look at me. Oh, 0 Bitcoin now. Because I didn't wait. I just wanted the dollars. Yeah, Tom, it's so frustrating. I can't believe it. Stories like that give me the chills. We've all done it in one way or another. Obviously, your loss is probably bigger than anyone else's loss. 100 Bitcoin. But 5,000 Bitcoin. Oh, my God. 5,000 Bitcoin. God, that's awful. I don't know how you move past that. That was a situation once. I mean, I've had opportunities right in front of me. And I didn't execute properly, and I've lost out. I don't want to go into the details of them, but it's awful. I mean, how do you stop thinking about it? But you just have to move on, don't you? It's just life. It happens to everyone to some extent, and we just have to put it behind us, see what opportunities there are. There's nothing we can do. Show us how much you win again. What's your year to date? My portfolio challenge has only really started going. Again, I'm not looking at short-term gains. I will show you my portfolio. Unfortunately, right now I haven't hooked it up. On most daily shows you can see it. Let me see if I can bring it up on my phone. It's not, again, as I've said, I don't care about where we are right now. I care where we are in 3-5 years. This portfolio is a long-term portfolio. I'm not looking to really day trade too much on this portfolio. The year to date is down 0.1%. That's the year to date. I'll try and show it on the screen. Down a 0.1% year to date. Started with 5,000, is currently at 4,985. So I wouldn't say that's drastic. I mean, I'm expecting to go lower or higher. Doesn't really matter in the short term. Yesterday was a tech AI sell because of AI slop and and bubble fit. AI complete. Yeah, right now that is where we're at. We're at some cracks in the AI stocks, and that's what's bringing it down. The value side of the S&P 500 is what's keeping us up. For all of you, the best. Actually, I've read that one. Yeah, I am. Oh my god, Tom. So I hold now 75,000 XRP, 150,000 Polygon, and 50,000. Polygon, yeah. Matic, Polygon, whatever it is. 50,000 ADA, and I will keep holding and I'll keep buying and hope it will give my kids an easy future because I don't need money right now. Wow. That's a lot. Tom Oliver, congratulations to you. And hopefully, as he said, it will go up in the future. Here we go. This is Martyn's new link. Let me just see what time is going live. He'll be live in 4 minutes' time. Okay, it gives me time to show you this. So, if you've enjoyed today's CPI report, there was much more in the CPI PDF that we reserved for the premium members. I just want to tell you about the newsletter. About 4 or 5 years ago, well, about 8 years ago, I started doing charts. 9 years ago, I started doing charts. I spent thousands on courses. I spent literally about at least 4 hours a day, a lot more at the beginning. Now it's about 4 hours a day, looking at charts, understanding charts. And when I combined the news and understanding the news and the charts together, that's when I started winning big. I started controlling my emotions with the charts, started finding entry points of the charts, and started to understand where we are in the market by looking at the news. There was big problems though. Charts took 8 years to learn, really 5 years to learn, and it was expensive. Learning all the other, looking at all the courses, this, that, and the other. Most of them were scams, and they weren't useful. But I wanted to do it so I can understand what's in the market, see everyone's perspective, and see what's best for me. Anyway, that was expensive. The news side of things was long, sometimes boring, expensive because I had lots of subscriptions. It was politically. There was always politics involved. There was always ads. There was always sponsors that wouldn't allow the publishers to really say what they wanted to say. So what we've tried to do here with the newsletter is solve that problem. We just sort that out a little bit. Is sort out that problem. So we started off with the newsletter about 8 months ago to give you all the top stories. So every, but you only need 5. So I sit there about 4 hours, 6 hours every day, some in the night, some in the morning, to put together the newsletter. You get full access to the newsletter if you sign up to, I'll give you the link as well, the free trial. Then I'm going to give you a special link for only 2 people. So stay tuned. There's 2 people that are going to win big in a second. Market news headlines. So you get full access to the market news headlines. You get full access to top movers, what's moving in the market. You get a fully ad-free experience. We're not sponsored by anyone. I can say what I like. No politics involved. No political narratives, no sponsored narratives. It is just the news. You get specific, my thoughts on every story. You get the chart of the day. Every single day I give you a technical chart. Event cheat sheets. These are so important for like days like this. That whole PDF I put together over here for all the members. You can see over here, we put together a CPI cheat sheet, all the data you need to know, everything about the CPI, all into one PDF so you can follow along, read it, and understand it. You get cheat sheets like that for FOMC, Japan carry trades, anything important like the XRP Community Day. You get that. You also get deep dive research. You get deep dives every day on macro, crypto, whatever, and also separate deep dives. You get an XRP crypto report. So if you're interested in XRP or crypto, you get a weekly newsletter on that. You get one-on-one DM access. You can message me anytime. You also get financial planning tools like budget planners, debt planners. You get the community, private access to the full community. That's where the other week I was posting and buying at 200-week moving average on Bitcoin. That was 60,000 on XRP. That was $1.14 or whatever. I was buying and I was posting. Again, it's not as alerts. It's just what I'm doing. My thoughts. People communicate there as well. And the chart training course, that's launching very soon. It's all just going to be like a very simple 2-hour video with follow-up lives on Substack itself. We'll be hosting those videos and lives on Substack itself. And you get that as a premium plan. So what I'm going to do is I'm going to give you 3 links. One is the 1 week free trial. If you just want a 1 week free trial, there it is. Also, you can get a free plan. There's a completely free plan and there's a monthly plan. Or for 2 people, I've limited this to 2 people, is the 50% off. 50% off for 2 people for the annual plan. I've just launched it again. I've put 2 people as the maximum. So 2 people are going to win today. So if you enjoyed the live stream today, if you enjoyed the CPI print, if you want to start winning bigger, better, understanding the news, understanding the charts, getting all the information, the £5,000 portfolio challenge is part of that as well. 50% for 2 people. So now we're going over to Martyn. You guys can benefit from that. So go and check it out. Only 2 people will get it today. That's one of the best offers we've ever done on the newsletter. Martyn will be live any second now. So what we're going to do is I'm going to leave you with that. I will leave you with the link. It's 50% off. It's in the live chat. Thank you everyone for tuning in. Thank you for supporting the show. I hope you enjoyed the CPI live stream. Martyn is going to be live now, so stay exactly where you are, and it will take you directly to Martyn's stream. Let me give you Martyn's link as well. It's on this channel, so you'll find it here as well. Let me see. Do we have Martyn's link? It's over here, isn't it? Here is Martyn. Please do go into a stream and say Sensei sent me. So then he knows that you guys came from my stream. Say Sensei sent me. That's Martyn's link. And go check out the 50% offer. There's only 2 spaces. And also, I hope everyone got their free XRP merch. We essentially were the ones who gave away $1,000 XRP merch. I know everyone in the subs in the newsletter got it. I want to see if everyone else got it as well. Let me know. Until next time, take care of yourselves and each other. Go check out the 50% offer. It's in the live chat right now. Martyn's live right now, so if you stay where you are, you go over to Martyn's report of the CPI and the opening bell. I'm live every single day, 2 hours before the opening bell. If you want to message me, you have to be a premium member on the newsletter. Take care of yourselves and each other.